Hello students, welcome to my channel Sparkle Mind. In this video, ma'am என்ன சொல்லித் தர போறாங்கன்னு நினைக்கிறீங்க? CBSE Accounts Additional Practice Questions Set 2ல 23-24 உடைய Analysis of Financial Statements உட சொல்யூஷன்ஸை நம்ம பார்க்கலாம். Analysis of Financial Statements இந்த இதில் Cash Flow Statements and Ratio Analysis தொடர்பான கொஸ்டின்ஸ்கள் வரும். இது 20 marks இந்த Part B Analysis of Financial Statements. Therefore, நீங்கள் 20 marks உங்களுக்கு 20 out of 20 assured success. இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்தா இதை உங்கள் நண்பர்களுக்கும் ஷேர் பண்ணுங்க. தேங்க்யூ. Part B, first question, 27. Current ratio of the company is 1:1. Which of the following will not affect the current ratio but decrease the quick ratio? Which of the following will not affect the current ratio but decrease the quick ratio? A. Purchase of goods on credit. B. Sale of goods on credit at no profit, no loss. C. Issue of debentures to vendor. D. Dividend proposed by the director. Here they are asking given current ratio. Current ratio nanna current asset by current liabilities. Current asset includes main trade receivables, debtor trade receivables, inventories, cash and cash equivalents and other current asset. எல்லாம் சேர்ந்து தான் current asset. Current liabilitiesல short term borrowings, trade payables and outstandings எல்லாம் இதில் வரும். Here current asset is equal to current liabilities since 1:1. Then quick ratio. Quick ratio is equal to liquid assets by current liabilities. என்ன சொல்லுவாங்க quick ratios? Liquid asset. Liquid asset நம்ம சொல்லலாம். Liquid assetsனா current asset minus inventory is known as liquid asset. Liquid asset by current liabilities. If first option A, purchase of goods on credit. இப்போ purchase of goodsனா goods comes in. So we will tell என்ன goodsனால purchases account debtor to vendor account creditor. Okay. So stock is increase ஆகும். As well as liabilities also increase ஆகும். Here it does not affect the current ratio. Why? Current asset is equal to current liabilities na asset increase எவ்வளோ ஆகுதோ அதே சமயத்தில் liabilities also increase ஆகிறதுனால no change. But in quick ratioவில் நம்ம இன்வென்ட்ரியை எடுத்துக்கிறதே கிடையாது. ஸோ குட்ஸ் வாங்கினாலும் வாங்காட்டாலும் இன்வென்ட்ரி does not affectங்கிறதுனால கரண்ட் அசட் சைடு அஃபெக்ட் ஆகாது. பட் கரண்ட் லியாபிலிட்டிஸ்ங்கிற போது லியாபிலிட்டிஸ் இன்க்ரீஸ் ஆகும். ஸோ இட் டஸ் நாட் அஃபெக்ட் த கரண்ட் அசட் பட் அஃபெக்ட் த குவிக் அசட். தேர்ஃபோர் ஹியர் ஆன்சர் ஏ. பி ஆப்ஷனை பார்க்கணுன்னா சேல் ஆஃப் குட்ஸ் ஆன் கிரெடிட் அட் நோ ப்ராஃபிட் ஓ நோ லாஸ். சேல் ஆஃப் குட்ஸ் ஆன் கிரெடிட். கிரெடிட்டுங்கிறதுனால நம்ம என்ன சொல்ல போகிறோம்? கேஷ் அக்கௌண்ட் டெட்டார் டு சேல்ஸ் அக்கௌண்ட் கிரெடிட் ஆகுமோ போத் ஆர் அசட் இன்க்ரீஸ் ஆகும்போது கேஷ் இன்க்ரீஸ் ஆகுது, சைமல்டேனியஸாக ஸ்டாக் டிக்ரீஸ் ஆகுது. இட் ஸோ ப்ளஸ் மைனஸ் இந்த சேம் சைடாக இருக்கிறதுனால இட் டஸ் நாட் அஃபெக்ட். லைக் தட் சி இஷ்யூ ஆஃப் டிபெஞ்சர்ஸ் டு வெண்டார். டிபெஞ்சர் இஸ் நாட் come under current liability. Therefore, C is not the correct option. Dividend proposed by the directors. Proposed dividend here no action is necessary. Dividend is only proposed, that's all. So purchase of goods on credit only does not affect the current ratio but affect the quick ratio. Second one, which of the following is not limitation of analysis of financial statements? A. Window dressing. B. Price level changes ignored. C. Subjectivity. D. Intra-firm comparison possible. Here, which of the following is not limitation of the analysis? Here, intra-firm comparison possible is only the is only analysis of financial statements. Window dressing, price level changes ignored, subjectivity, they all are the limitations. Or question. Which of the following is not objective of analysis of financial statements? A. To judge the financial health of the firm. B. To judge the short-term and long-term liquidity position of the firm. C. To judge the reason for change in the profitability of the firm. D. To judge the variations in the accounting practices of the business followed by different enterprises. Which of the following is not an objective? So answer D. To judge the variations in the accounting practices of the business followed by different enterprises is not an objective of analysis of financial statement. Question number 29. Read the following information. Particulars 31,322 and 31,323. Plant and machinery at cost 20 lakhs, here 30 lakhs. Accumulated depreciation 4 lakh 80,000, here 5 lakh 90,000. During a year, a part of machinery book value 2 lakhs was sold for 1 lakh 10,000. Depreciation charged during the year was 1 lakh 50,000 given. Determine the amount to be shown under non-cash, non-operating expenses while preparing cash flow statement. A. Rupees 1 lakh 50,000. B. Rupees 2 lakh. C. 2 lakh 40,000. D. 50,000. Solution. Here, plant and machinery at cost 20 lakhs is given. Like that 30 lakhs is given. Accumulated depreciation 4 lakh 80,000 is given. Here 5 lakh 90,000 is given. So we have to prepare the machinery ledger. To balance brought down beginning like 20 lakhs, debit sign. By balance carried down 30 lakhs, credit sign. By bank sale. So asset is sold for 1 lakh 10,000 given, credit. So given that book value is 2 lakhs, it is sold for 1 lakh 10,000. Therefore 90,000 is loss. Then To by transfer 1,30,000. So here from accumulated depreciation we get 1,30,000 transfer. By balance carried down 30 lakhs given. So totally we get 33 lakhs 30,000. Here to bank purchases 13 lakhs 30,000. So by P&L account, this figure transferred to accumulated depreciation. So balancing figure 2,40,000 is shown in operating activities under the head non-cash item by depreciation. So answer C, 2,40,000 in operating activity. Read the following statements. Statement 1. Rent received by a real estate company is an operating activity. Statement 2. Dividend paid by a finance company is financing activity. Statement 3. Current investment is considered as cash and cash equivalent while preparing cash flow statement. Choose the correct option. Only statement 1 and 2 are correct as A. B equal to only statement 2 and 3 are correct. C is equal to statement 1 and 3 are correct. D, all statements are correct. Here answer D. Since statement 1, 2, 3 all are correct. Therefore answer D. Since rent received by a real estate company is an operating activity, this statement is correct. Dividend paid by a finance company is financing activity. It is paid by a financing company. Current investment is considered as cash and cash equivalent while preparing cash flow statement. This statement is also correct. So all are correct. Option D. Next question. While preparing cash flow statement, which of the following transactions will affect the cash flow from investing activity? A. Loss on issue of debentures, written off from securities premium, goodwill purchased, building purchased by issue of debentures as consideration. Issue of bonus shares. Here, loss of issue of debenture written off from securities premium will not affect. It is adjusted. Building purchased by issue of debentures as consideration is also not affected. No cash involvement. Issue of bonus share also no cash involvement. So only goodwill purchased only is a cash outflow in investing activities. Therefore, except B, remaining will not affect the cash flow statement. 31. Profit after tax amounted to 6 lakhs and tax rate was 20%. If earnings before interest and tax was 9,50,000 and debentures were amounted to 40 lakhs, assuming the only debt of the company. Determine interest coverage ratio. Also determine the rate of interest on debentures. Given earnings before interest and tax is 9,50,000, but debenture interest not given. So we have to write the format. Earnings before interest and tax less a debenture interest gives earnings after tax, which can represent EAT, less tax than profit after tax. So here profit after tax 6 lakhs is given and tax rate was 20% is given, and earnings before and interest tax 9,50,000 is given. We have to backward. If 20% of tax is 1,50,000 means then 100% of before tax we have to calculate. 20% of tax is equal to 1,50,000 and earnings before interest is 7,50,000. Therefore, earnings before interest and tax 9,50,000, earnings after interest 7,50,000. Therefore, difference 2 lakhs is equal to debenture interest. So, debenture interest is 2 lakhs for 40 lakhs. Therefore, rate of interest is equal to 5%. So, interest coverage ratio is equal to earnings before interest and tax by interest. Earnings before interest and tax is 9,50,000 and interest is 2 lakhs. Therefore, we get interest coverage ratio is 4.75 times. 4.75 times. Question number 32. State the head and subhead under which the following items are shown in the balance sheet of a company as per Companies Act 2013. A. Finished goods. B. Bank overdraft. C. Prepaid insurance. D. Debenture redemption reserve. E. Capital advances. F. Debentures due for redemption at the end of the year. Solutions. Items, heads, subheads. First, finished goods. Finished goods comes under current asset, subheads, inventory. Bank overdraft. Under the heads, current liabilities, subhead, short-term borrowings. Prepaid insurance, current asset. Subheads, other current assets. Debentures redemption reserve, heads, shareholders funds. Subhead, reserves and surplus. Capital advances. It is non-current asset and comes under long-term loans and advances. Debentures due for redemption. At the end of the year, current liabilities, short-term borrowings. Question number 33. Fill up the missing figures. Comparative statement of profit and loss for the years ended 31/3/22 and 31/3/23 is given. Particulars revenue from operation 22 is given, 23 is asking, but absolute change 20 lakhs given, percentage change is given. Like that, cost of material consumed 23 is given, absolute change is given, then percentage is asking. Other expenses like that, 22 is given 4 lakh. Here percentage change is 150% is given. Therefore, we have to find the remaining total expenses and profit before tax, etc. Solutions. Revenue from operation. 20 to 40 lakhs is given, but absolute change 20 lakhs is given. Therefore, 20,000 we have to add back, then 60 lakhs is 23. Change is equal to 22 is taken as A, 23 is taken as B, absolute change is B minus A, percentage change is B minus A by 100. Therefore, we get 50%. Like that, cost of material consumed is 22 in the 20 lakhs, 23 30 lakhs, absolute change 10 lakhs, percentage change is 50%. Other expenses 22 4 lakhs, 23 10 lakhs, absolute change is B minus A is 6 lakhs, percentage is 150%. Total we get total expenses 24 lakhs for 22, 40 lakhs for 23, absolute change is 16 lakhs, therefore change in percentage 66.6%. Profit before tax. So total revenue from operation 40 lakhs, total expenses 24 lakhs, we get 16 lakhs profit before tax for 22, for 23 20 lakhs, absolute change is 4 lakhs, percentage change is 25%. Or question. Prepare common side statement of profit and loss from the following information of Amateur Limited for the year ended March 31, 2023. Particulars amount in rupees. Revenue from operation 250% of employee benefit expenses. Given here, the revenue from operation is 250% of employee benefit expenses. Purchase of stock in trade 2 lakh 50, opening inventory 80,000, closing inventory 1 lakh 55,000, employee benefit expenses 6 lakhs, other income 3 lakhs, 10% debentures 6 lakh, depreciation on tangible assets 75,000, amortization of tangible assets 15%, tax rate is 20%. Prepare common size statement. Solution. Common size statement of profit and loss for the year ended 31/3/23. Particulars amount as a percentage of revenue from operation. As a percentage of revenue from operation. Revenue from operation is 250% of employees benefit expenses, that is given 6 lakhs. Therefore, 6 lakhs into 250% is equal to 15 lakhs. So, absolute revenue from operation is 100%. Other income 3 lakhs. Total revenue 18 lakhs is equal to 120%. Here expenses. Purchase of stock in trade 250 lakhs. Change in inventory 75,000 negative figure, therefore minus 5% negative figure. So, employee benefit expenses 6 lakhs which is equivalent to 40%. Finance cost is 60,000 which is equivalent to 4%. Depreciation and amortization 90,000 which is equivalent to 6%. that is 90,000 out of 15 lakhs revenue from operation into 100. Total expenses 9,25%, that is 61.67%. Profit before tax 8,75,000, less tax 1,75,000. Profit after tax is equal to 7 lakhs, that is 46.67%. Five minus 6. Question number 34. Following is the balance sheet of MEENAKSHI Limited. Asset 31,323. Particulars notes number 31,323, 31,322. So equities and liabilities. 1. Shareholders funds. A. Share capital 3 lakhs, 1 lakh respectively. Reserves and surplus 25,000, 1 lakh 20,000 under notes number 1. Second one, non-current liabilities. Here long-term borrowings, note number 2, 80,000, 60,000. Third one, current liabilities. A. Trade payables 6,000, 20,000. Short-term provisions, notes number 3, 68,000, 70,000. Total 4,79,000, 3,70,000. Here assets. Non-current assets la fixed assets 3,36,000 for 31,323 and 1,92,000 for 31,322. Current assets la inventory 67,000, 60,000, trade receivables 51,000, 65,000, cash and cash equivalents 25,000, 49,000. Other current assets la 23 nil, 22 la 4,000. Totally 4,79,000, 3,70,000. Here notes to accounts. Revenue, reserves and surplus. In this reserves and surplus, that is balance in statement of P&L account is 31,323 into 25,000, 31,322 1,20,000. Notes number 2, long-term borrowings 10% long-term loan 80,000, 60,000. Short-term provisions, provision for tax 68,000, 70,000. Fixed assets. Machinery 3,84,000, 2,15,000. Accumulated depreciation 48,000, 23,000. Total 3,36,000, 1,92,000. Additional information. Additional loan was taken on 1st July 22. Tax of 53,000 was paid during the year given. So prepare cash flow statement. Solutions. John's Limited cash flow statement for the year ended 31/3/23. Particulars, details and amount. First, cash flow from operating activities. A. Net profit before tax and extraordinary items. Here, as per notes number, balance in statement of profit and loss is equal to current year 25,000, previous year 1,20,000. Therefore, this year loss 95,000. This year we get loss. 95,000 is the starting point. Add provision for tax. Refer working note 1. Working note 1. Provision for tax. Particulars amount. By balance brought down, previous year is given 70,000. Current year is 68,000 is given. In additional information, current tax is given for 53,000. Tax of 53,000 was paid during the year is given. So, to bank tax paid 53,000. Therefore, balancing PR profit and loss account is 51,000 for the provision for tax. This should be here added. Then net profit before tax and extraordinary item is equal to 44,000. Here negative figure. Then adjustment for non-cash non-operating item. First one, interest on loan. Refer working note 2. Working note 2, interest on loan. Here notes to accounts 10% long-term loan as on 31/3/62 22 60,000 இருக்குன்னு கொடுத்துருக்காங்க. Additional loan வந்து obtained on 1/7/22 date is furnished 20,000. So total interest வந்து 60,000க்கு 1 year, then additional loan 20,000க்கு from 1/7லேருந்து நீங்கள் பார்க்கும்போது 9 month. That is July, August, September, October, November, December, January, February, March. 9 monthsக்கு மட்டும்தான் இன்ட்ரெஸ்ட் கொடுக்கணும். Therefore total interest 7,500. So interest on long term loan, that is it relates to finance, therefore it should not comes under operating activities, therefore we should add that one. Depreciation on fixed asset is accumulated depreciation is given, so like that 25,000. So we get operating profit before working capital changes is 11,500 is negative figure. Since this comes 32,500 positive, 44,900 is a negative figure. So we get negative figure of 11,500 operating profit before working capital changes. Working capital changes. Decrease in trade receivables 14,000. Decrease in other current assets 4,000. Both are added. Decrease in trade payables 14,000 less for here. Increase in inventories also 7,000 less figure. Therefore, cash generated is from operation 14,500 is here. We get negative figure. Since 14,000 plus 4,000, 18,000 positive. 14,000 plus 7,000, 21,000 is a negative figure. Total negative figure, already we have 11,500 negative figure. So 42,500 minus 18,000, we get 14,500 negative figure. Here 18,000, here 21,000 negative figure. So net result 3,000 negative figure. So 11,500 by 3,000, 14,500 is a negative figure. So tax paid is 53,000. So cash flow from operating activities is 67,500 is negative figure. Next one, cash flow from investing activities. Purchase of fixed asset is a cash outflow 1,69,000. So cash used in investing activities is 1,69,000 is a negative figure. E. Cash from financing activities. Issue of shares 2 lakhs. Raising of loan, long-term loans 20,000. Less interest paid on loans 7,500. Therefore, cash flow from financing activities 2,12,500. Net increase in cash and cash equivalents, we get 24,000 negative. Add opening cash and cash equivalents, that is cash in hand plus deposit 49,000, we get 25,000. Closing cash and cash equivalent 25,000 G.